Good morning, everyone. Good morning, good morning. Welcome to another week, another day to our Futures live stream. If you're here for the first time, welcome. My name is Tyler, and I'm going to be helping navigate you through the wild world of day trading futures. And this week looks to be a pretty exciting week. We have a full week of news. We'll be going over that. We're going to be starting off by going over a higher time frame analysis, look at a weekly, daily, and hourly charts, and then we'll zero in on what our current bias is and put together a narrative so that we can potentially take a trade here today. So I'm really excited about this. If you are looking to take your trading to the next level, you can use the code DTJ and get anywhere from 30 to, I think yesterday was the last day, anywhere from 30 to 70% off your next evaluation account. And as of this weekend, I added a few new prop firms that I wanted to test out and try. So we'll be talking about some of those for you to be able to try out yourself if you're looking for maybe something different. However, most of the prop firms that I currently have there, TPT, Apex, and Tradeify, is pretty much all that you need. There are some other cool ones out there that actually pay you based on you passing your evaluation account. So it's actually pretty cool. We'll be talking a little bit about that one today. I wanted to test that one out. So before we really get started, let's go ahead and open in prayer, and let's dedicate this trading session to the Lord. So Father, we just honor you this morning. Thank you, Father, for your faithfulness, for your goodness, for your patience with us as we continue to exercise and grow in walking in the fruits of the Spirit. Father, I thank you that we have patience. You've given it to us. It's a free gift. And we choose to exercise patience, self-control, and walk in those fruits of the Spirit here today. Lord, I just pray for an increase of your presence for everyone here. For those that don't know you, Father, may they come to know you more intimately. Father, I pray for an encounter, that they would encounter you in a rich and real way. Father, I pray for increase in their lives relationally and economically. I pray for a great day today in trading. In Jesus' name, and everyone said, good morning. Tony, it may have been because I started it relatively late, so I didn't put it up on YouTube early enough. I actually created the live stream at 9:10, so just 8 minutes ago. That's probably why. So hopefully it'll start showing up for those that may not check my channel. So how's everybody doing this morning? You guys have a good weekend? Good weekend? Vo, good morning. Rod, Monet, Charles, Paul, good morning. Matthew, amen. John, good morning. Carlos, Wendy, how you doing? Arizona Lance Man. Ricardo, good morning. Marine, how you doing? Matt, what's up? You bet, my friend. Prodigy Knight, good morning. Rathan Dallas. First time here, welcome. Glad you're hanging out with us today. Glad you're hanging out. If you have any questions as you're hanging out with me, or I'm saying something that you're like, I have no idea what this guy is talking about, drop it in the comments. Typically, the comments aren't moving too quickly that I should be able to answer it. So, all right, with that, folks, let's go ahead and get started. Let's jump out to the monthly time frame because we are in a new month, okay? We are in a new month, and we want to identify where our opening price is for the month of June. This is our monthly price, opening price. We want to keep track of that level. And then I'm also going to mark our high and our low of the previous month, so that we know where the midpoint is. I always like to know where those are. It's usually a potential target at some point. in the trading days, weeks for the month. And that's pretty much all that I'm looking for on this chart. I will take a look and note that we had a monthly fair value gap that was created right here. And we have not tagged it yet, okay? Excuse me, we've inversed it, okay? So it is a real possibility that we come back down and tag this inversion, this monthly inversion, before we see a continuation higher. That's from a larger macro perspective. So lower, I mean, we're talking, that's less than 1,000 points. So that is a real possibility that we could reach to a level like that. And conveniently, guess what it overlaps with? It overlaps with the weekly fair value gap and volume imbalance sitting right down here. And we have that Friday midpoint from May 5th that still hasn't been tagged to this day. So even if I am bullish, even if I want to see higher prices, I think we need to revisit these levels prior to a move higher. Now, could news, some type of economic event happen that just causes this to explode higher or just to drop lower and disregard this level? Sure. But if that doesn't happen, I would like to see this to move higher on a weekly time frame. We have our weekly fair value gap that's sitting right here. We've reached and swept this high, but closed inside the range again. We are currently in discount from the weekly candle, the previous week candle. So we're in the discount portion. So unless we can get above this level and stay above it, I'm probably more interested in the downside. Dropping down to the daily, we have this daily fair value gap that we have referenced twice, ran completely through it, but have closed above it. I will say that if we can't close below this daily fair value gap, we're probably not going to see these prices. So as soon as we close below this, I would say the following day is going to be pretty aggressive to hitting these levels, unless it does it all in one fell swoop. We also swept the highs in this candle right here and closed inside the range and fell and closed bearish, I should say, as well. So I'm partial on a higher macro perspective, interested in these levels down here. That's where I want us to end up. And I would like to, we have a lot of news this week that we could potentially see some movement in those directions. Here is the here's the events for the week. So Monday, we have red folder. Tuesday, Wednesday, Thursday, and Friday, we have all red folder news events. So we had some, we're going to have some at 10 o'clock here. We'll have some at 10 o'clock on Tuesday, 10 o'clock, 8:15 and 10 o'clock on Wednesday. This is Central Time for me. 8:30 and 8:30 on Thursday and Friday. So we do have a lot of events that could affect where price wants to go that are scheduled at specific times. So we're going to watch these specific times and see if the market ends up doing something at those levels. Dropping down to the 4-hour, I've already marked our new week opening gap. You can see the new week opening gap. This is the close price, and this is the open price. That's also the monthly level there. So you'll see the monthly red line there overlapping with the low and high of the new week opening gap. So I have that marked out. We've swept that high last week. We still haven't tagged this 4-hour fair value gap. That would be of some interest if we want to reach up to there. It wouldn't surprise me if we did. So we're going to keep that 4-hour fair value gap there. And then we have this 4-hour fair value gap down here that we've referenced multiple times, 3 times in particular, and that is our support for price so far. The new week opening gap could be rebalanced, and I wouldn't mind it wanting to be rebalanced sitting right here. So price reaching up into here, and if it wants to go through it, we could reach for the previous week midpoint, previous day high, and then there's the 4-hour fair value gap. So there on a lower time frame, when we try to put together a narrative, the narrative has a potential for a bullish movement as well as bearish movement. Here's been our over Sunday and over the night price action. We had a nice big candle right here that swept, or that reached lower, and then we've been moving higher. There's really no fair value gaps on the hourly time frame here. So more than likely, we're going to be re-referencing these levels here, inside the new week opening gap. That's what I would be potentially interested in. Dropping to the 15-minute, let's go ahead and mark our opening range gap. Want to find the 415 opening price. That'd be right here. And we'll drag it to our current price. Mark that as our opening range gap. Shrink that. We have a premium opening range gap that's going to be solidified here in about 3 minutes. Still looking at that 15-minute fair value gap. We have a 15-minute time frame. Here's a 15-minute fair value gap that we have referenced multiple times. Price has been staying underneath it. That is a 15-minute SIBI. And then above that, we have some swing highs, and we also do have some equal highs right there on the 15-minute time frame. So we'll see if price wants to look how that conveniently overlaps with the midpoint so far of the opening range gap. That makes me say, hey, pay attention to that level. But we've been in a tight, really consolidation. I did take a pre-market trade right in here. The 30-minute reversal showed up, and unfortunately, we did not run this level right here. I was really looking for this level to be ran. Instead, we just created relatively equal lows that should be ran later at some point. All right, 1 minute till the market opens. Let's take a look at the 1 minute chart. Let's see what we got here. See how it's ranging right now? It's just kind of back and forth. There's no rhyme or reason. It's not intentionally trying to go anywhere. That could change right at the open, reaching up into the new week opening gap, sitting here, and there's the midpoints that we marked out. I marked our London low, and let's go ahead and mark our midnight open. Don't think I'm going to be taking the 930 model this morning. All right, there's opening price. Nice pump immediately into the monthly price and the new week opening gap low. So the 930 model did play out. We'll go ahead and mark our opening price. $9.30. And we'll see what I've been testing out. I mentioned a couple days ago, last week, that I was going to test. I was going to do some back testing on the opening price, giving a fair value gap on the 930 model. So we get green, green, green. And if we come into a fair value gap, how often is it explosive? Well, we've been having a 70% win rate. I'm honestly have been shocked. There's still some different factors that I gotta put into it on deciding if I'm taking a move or not, but they've been playing out surprisingly. Surprisingly, they've been playing out, and we may try that here with a single micro. See if it wants to do it. If it gives us an entry. Unfortunately, the risk is pretty large. So let's just say we get an entry right here. The entry the stop loss would be here. So that would be a 45 handle stop loss. And then the target I've been testing is just a 1-to-1 R. So we would be targeting 45 handles. So it'd be something like that, which makes a very large risk. But it has been playing out. And there have been a few times that I've seen these candles, it doesn't retrace at all, and there's just no opportunity. You can't take a trade when there's simply no retracement. So if we don't get any type of retracement, then we are just gonna sit and watch it run. We just hit, ES has hit the midpoint of the previous week range. We have our previous week range sitting right there. That's just, we've gone 100 handles in 3 minutes, guys. That's crazy. For my testing, the last fair value gap that I've considered taking in my back testing has been the 932 candle. Here's our first presented fair value gap. We have this 4-hour fair value gap sitting up here, folks. I don't know why we're just pumping like that. That's just crazy. But I'm not in anything. I'm fine with it. We're so close to the previous day high. We'll keep an eye on that in this 4-hour. Ted, 928 would have been super nice. Yep, a little breaker right there. Low, high, lower, low. Breaker. Shabam. Kevin from Lakeland, Florida. Welcome, Kevin. The only way that's going to change, Ted, is you got to back test. Back test it. How many times do you see a super clear breaker between 9:25 and 9:30, and how many of those actually play out? That's exactly what I did with this, right? If you see that it's a 70, I'm not gonna lie. If this would have came into this fair value gap right here, not on this candle, but this candle right here, and it closed and it respected this fair value gap, I would have taken the long, because I've seen it play out that many times in my back testing. That's the only thing you can do. So go back and back test it. Yeah, you have to do it. That's the only way it builds confidence. And the more I've been back testing, the more I'm like, you know what? Why take these stupid, erratic, impulsive trades when all I have to do is go back test, find 50 trades of a specific criteria and see what the percentage is. And if it comes out to be a great percentage, why not take it? Why not take it? Why waste my money on these impulsive other stuff? So I've been really enjoying the back testing that I've been doing. It's been really, really nice, refreshing. I've done it before. I just haven't done it to this level. And I'm not going to lie, guys. TradeZilla has made it extremely easy. And it gives you all the data on it. I mean, it's been phenomenal. I'm going to obliterate the back testing tool on TradeZilla because it's so convenient. I can find out, like, for example, so the criteria that I'm looking at for the sell-off or the pump right off the open, like we saw right here, is that I want to see if we get a large 930 candle and if it gives us a fair value gap. And then if it comes into that first fair value gap without consolidation like we're seeing right here, I'm going to take the long off of that level. So it takes me 10 seconds to find out if a day is showing the model. And I literally go from one day to the next. Boom, 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 boom. Yes, TradeZilla does have a subscription cost. And since you brought it up, I'm probably going to go back test the breaker. I'm going to back test the breaker, and the criteria that I would be looking at is, do we get a breaker and a tag specifically? Do we get the tag of the breaker? There's the breaker. Do we get a tag of a breaker between 925 and 930? And if we do, how often does it play out? That's what I'm going to backtest now that you brought it up. Because I think you're right, because I've seen it happen many times as well. I've called out the breakers right off the open, and it tags it on the 930 at 930, and then it just moves in the direction of that breaker. Oh yeah, that would be another added confluence to the 930 model. There'd be so many. I'm not gonna lie, I've thought about this. All right, so we just tagged the 4-hour fair value gap, guys. There is zero entry in all of this. Okay, this is where you get FOMO, and you're like, those red lines is how you feel on the inside. You just gotta ignore it. You honestly have to ignore it, because it's those types of moves that you're like, why can't I get into that? And then you take a impulsive trade following this to try to catch the move, and then you end up taking a loss. Okay? So come to the acceptance that it's okay to miss moves like this. You may not get another move that day, but there will be another move. I'm not feeling any FOMO. I was honestly hoping that we were going to get this stab into this fair value gap, because over the weekend, I mean, I've taken probably 40 trades of this right here, and it's been playing out really, really nice. And I'm like, hey, why not test it out? Hi, Maria. Yeah, I took a 30-minute and the breaker right here. I took this trade right here when we came up into the 3-minute inversion fair value gap. So we had a breaker here, high, low, higher, high. We broke lower. I took a trade right here and I sold it down here. I was hoping for this level right here to be tagged. It didn't, so I ended up selling right around here. So that gave me roughly 20 handles. So there's the 4-hour tag. So narrative in my mind is this is very bullish, but there's permission potentially for a reversal. We also tagged the previous day high. Guys, if this inverses, that might not be a bad move down to these levels here. It's going to be before, most likely, when I get the green light. So I might just take a single micro trade on this. I mean, I like it. I really do. All right, let's see what happens. I'm going to move that there. We'll share my screen. Let's see if it gives it to us. Tagging the midpoint of the previous week range. That's what that stop and pause is. Let's see if it pushes through it. It's just, it moved too aggressively. I want to see if it will give it to us. All right, target tagged. One contract remaining. It's going to move to break even. I'm going to see if we get just an aggressive push lower. I'm willing to let this run to break even. That's why I got 2 contracts. And it will probably get stopped out. But in case it doesn't and it wants to move aggressively, I got a limit order sitting down here for a nice big push lower. So let's see if we get it. What do you think? Think we can get it? Back down to the first presented fair value gap at 44. That's where this is going to sit, right inside that fair value gap. Should I move it lower? Should we go lower? I don't know. I think that's a good level. That'd be 70 points. I'd be happy with a 70-point move. I don't like that candle there. Let's see if this fair value gap holds. This fair value gap right here. I want to see a lower low input in this candle. This is also a breaker right here. Candle breaker. There's your breaker entry. I'm thinking of moving this even lower here, folks. It depends on how we react. If we slice through this first presented fair value gap like butter, I'm gonna keep my target lower. If it finds support there, I will end up closing that. So I'm looking at something like this right now. Stops at break even. I will note that midpoint, we have reached the midpoint of this move. So this could have been the midpoint. But we're going to see if we can get it. We'll move our stop to the high of that candle. Because if we get back up to this high, then I don't want to be in the trade anyway. So we've secured some profit. All right, this is the moment of truth. How do we react to this first presented fair value gap? That's the first presented fair value gap. I would love it to close through it on this candle or the next candle. Okay, we'll give it this candle here. If we don't close below it, I'm going to close the trade. If we do close below it, then we're looking nice. I'm going to actually move my target, see how we react to the monthly opening price, set at 303. Sitting right around there. How do we react to this level here? $15 seconds. If we close inside of that fair value gap, I'm going to close the trade. Okay. Okay, this is midnight. This is the monthly opening price that we're about to tag right here. And it's the new week opening gap low, so this is important. I think I want to take profit there. I'm going to be very happy with that. That will be a 110-point move. I'm going to take it. All right. That came out to be just under 100 points. That's the kind of trading I like. No. We're not including 930 on the first presented fair value gap. I'm watching all the key levels here. Midnight open, new week opening gap, 930 would be the next level. This 15-minute fair value gap would act as a inversion fair value gap. So there's multiple things that are sitting right around here on why I decided just to take it. This is the first presented fair value gap. We want to see that, tag it, and we want to see it roll over from here. Thank you, Monet. Thank you, John. Guys, I'm not gonna take another trade. When you got an execution like that, the only regret I have is why didn't I take 5 contracts? That was all with a single micro, guys. Over 200 points. $250 with a single with 2 micros. Risk. We risked nothing. We did risk. We had some risk. But for the reward, holy macaroni. Let's see. What was our risk? Our risk was a close above this fair value gap, 24 points. So we risked $80 for 250. That's a 4R trade. We got out here. Yeah, 4.18. Well, I'll see how it closes in this first presented fair value gap. However, if it closes above it, I would call it. That's when I would be out there, Ted. If we don't close above that first presented fair value gap, I think we could still drop. Oh, news is also in 3 minutes. Was the purpose to get a reward up to the lowest fair value gap? I don't understand. Sorry, Maria. Yeah, look at that. This is why, one of the reasons why I do the close is because those wicks can just slap you in the face, and then it does this. Was the purpose to get a reward up to the lowest fair value gap? How did you decide upon where to take profit? Okay, take a look. So this was the lowest fair value gap. Okay, so once below this fair value gap, the next target would have been a swing low. Okay. Obviously, we are still running lower. And I got chickened out because I hate retracements. I really do. But the primary reason was this candle right here. We tagged the new week opening gap, failed to hit this, closed higher. We did the same thing. We tagged it to the tick, the new week opening gap low. Look at that new week opening gap right here. Okay. There's that new week opening gap. Not even from this week, from May 18th. And then we started retracing and closed green. I think I closed it before we closed green, but it was right around here. When I saw that, my inside, basically I felt we were going to get some type of retracement because there's a few key levels of support here. There you go. We tagged midnight or the monthly opening price, and we're still sitting right around here, that I just didn't know how far it would want to go. I did not think about saying, well, let's stay in the trade and see if the first presented fair value gap finds support. I didn't think about that. I didn't think that far ahead. I was just thinking, oh, we could get a retracement. I don't want to be in that big retracement because look at this giant move we've had so far. So if I had enough forethought to think about this first presented fair value gap, I would have done exactly what I told Ted, is don't get out of the trade unless we close above it. We didn't close above it again, so what do? We stay in it, and there it's running even further. So I got out on signs of a potential retracement, but the retracement doesn't mean that it's reversing. It means it just could be retracing. I should have had a little more forethought, because look at that. Probably run all the way to midnight open. And these equal lows right down here. But we don't need to get the full move. I mean, I'm happy with 100 points. Right? I would disagree with you, Matthew. If you go back and you look at news, if you're seeing a market maker sell model or a market maker buy model, you will see many, many, many times that the news is a continuation of the move that gives it the aggressive reason why it's running. Now, could it have gone this way and it have a reason to? Yes, because if you look left, we could have easily said that it ran into this breaker right here. Low, high, low, high, lower, low. We break higher, and this could have been a breaker. So if we have stuff like this, then yes, I think that price could have had any reason to go one way or the other. But this just, I mean, it doesn't surprise me that we ran these equal lows that I marked out, does it? Right here. And then now we're having a big retracement. It's because price just runs for liquidity. And news is an excuse to move price where they want to take it aggressively. The only ones that are like almost and the ones that ICT specifically mentions that he doesn't really try to predict is CPI, FOMC, and NFP. Those are the ones that move the markets very, very aggressively. But every other news, for the most part, will fall in line with where they're planning on taking price. Yeah, it's baked in. If you like that trade, guys, if you appreciated the commentary, do me a solid. Hit the like button on the video. Not the chat, the video. Thank you. Greatly appreciate it. Now that we're done with that move, let's go ahead and do our daily affirmation. Oh, look at that. I already see somebody posting. Yep, there's Ryan. Ryan decided to take the same trade we did. He took the inversion. He played it all the way to the equal lows. I don't know if he played it to the equal lows. He does this a lot. Is he'll post a trade like this, but he doesn't show the executions. So I don't even know if he took it. But here's our affirmation for today. I am disciplined, focused, and relentless. I stick to my process. I don't chase the market. I let the market come to me. A person's wisdom, this is a proverb, a person's wisdom yields patience. It is to one's glory to overlook. That proverb is very dynamic in many, many situations because wisdom applies to basically everything in every area of your life. But if you're looking in the context of trading, a person's wisdom itself will produce patience because wisdom says to sit on your hands, don't do anything, don't chase, don't overtrade, don't revenge trade. It produces patience. It's to one's glory to overlook a matter, to overlook the missed move, to overlook the frustration, to not give time to those thoughts. And when you look back at those moments where you're like, man, I really wanted to do something, but I didn't do it, it feels good, doesn't it? It feels like you feel accomplished. You feel like, hey, I actually exercised patience. I exercised wisdom in that. And it feels good. It's to one's glory. That's what it's saying there. So I always put the wrong one up. But based on that move, folks, look at that. We tagged that out 4 hour. We called that. We said that could come up to there. And now, honestly, unless something happens, I really think we have some consolidation with lower prices. Yeah, nice sweep of liquidity. I don't think we're going to run the previous day low unless we're having a double break day. We've already ran the previous day high. So 11% chance that we run all the way, we break this level. What I've seen happen many, many times, folks, is price will do one of these. We break the high, and then by the end of the day, we end up down here. And then at the opening of the new day, 6 o'clock, we go boom, and we slap the previous day low. And it does it quick. So if I'm a bet man, that's kind of what I would think would happen. Unless it's a double break day, then it will just run right through it. But there's no reason for me specifically to take another trade. I had a pre-market trade on my personal account. Was a win. One trade. Took this trade on all my funded accounts. Win. Wisdom says be done. Be grateful for what was given to you. Don't lose your profits in the afternoon. One of the mistakes I've made when I look back at my trading history is I win early, and throughout the day I cut into my profits. And I don't want to do that today. We're turning a new leaf. Turning a new leaf today. Joe, I don't trade gold nearly. I did actually take a gold trade last week. I basically watch gold because I own gold. And I think we're still gonna go higher on gold. Here's the weekly time frame. We wicked into this fair value gap sitting right here, and we're kind of consolidating. I think we're going to do that again. I think we're going to see 3,600. Silver. I'm considering buying more silver. Because this is where I think we're going to go, probably to 50. And the reason why I think that is you got to consider the conditions we've been in. With the rumors of war since 2024 right here. This is 2024. That was basically when the escalations of all of wars started to happen. This is what has happened with silver. And I think war is in the future. I don't know how bad, but I mean, we're already in a war. All right, I want to share a new prop firm that I'm kind of intrigued with, okay? I do have, when they do discounts, we'll have a promo code, and I've already put the link down in the description of this video. But I'm going to show you Funded Next. There's several things that they do a little differently that I kind of like. And I don't know all the rules yet. But it was over the weekend that I started to look into them. So if you notice, the first thing is that all these are really low numbers. $6,000 is for the first plan. So it's not fictitious fake account money like you would get with Apex, 25, 50K, 100K account. It doesn't work that way. It's a $6,000 account. The cost is $65 for their one-step plan. So they have a one-step plan and a two-step plan and then a Stellar Light plan. But we're going to focus on just the $6,000 one so you can get the concept of it. So it's $65. They have a 15% profit share once you pass the challenge phase. So you can make $90 by passing your test phase or your challenge phase. The profit target is 10%. That means 10% of $6,000, it's $600. To pass your challenge phase, you only need to make $600. You cannot lose more than $360. So it's tight. It's single micro type trading right now on this size of account. Your daily loss, you can't lose more than $180. They allow news trading. Split profits up to 95%. It's eligible for once you get into your funded account, you'll keep 95%. They keep 5%. Minimum days of trading is 2 days before you can pass the account. Your first withdrawal, or basically to get access to the 15% profit share, you got to trade. You can't do anything for the first 5 days. And the refund fee, they will refund you your price once you become profitable, $65, which is the cost of the plan. So they are including some unique things to this that are just a little bit different than all of these other ones. And I'm interested to see I'm going to try it myself. So they have a 15K plan. It's $129. 25K plan, $219. So you can see the associated levels and what your targets is. So 10% target for this one on a 25. That means you're looking to get $2,500. You can't lose more than $1,500. And you can earn back your initial investment of $219 by passing the account. They also have a two-step phase, meaning you can get paid back on phase 1 and phase 2. Phase 1 is only an 8% target. Phase 2 is a 5% target. So we're talking like $300 for your second phase and $550 for your first phase. Those are really low numbers. And it's what's intriguing me about this is like their targets are less than Apex, Funded Trader, not by much on these higher accounts, but on the lower accounts is what's really intriguing. Is if you trade with a single micro, you potentially could make your money back fairly quickly and start getting withdrawals. For this one on the two-step challenge, you can't take your first withdrawal for 21 days. I don't like that aspect of it. For the two-step phase, let's see. On the first step, first withdrawal is 5 days. And then on the Stellar Light plan, it's 21 days. But it's also cheaper. So if you want to check out this and test it out, you can. I have a link down in the description of of this video if you want to check it out. They do give a 5% discount, I believe, when you use that code or when you use that link, if you're interested in checking it out. So I'm gonna try this out myself and see what comes of it. but I wanted to share it with you guys. Am I looking at the wrong one? Let me see here. I was looking at the wrong one. Thank you. We just did all that time on the wrong stuff. Here, let me reshare it. We'll look at it together. All right, so this is, you're right. It was not, I was wrong in everything that I said because I was selected on that and not on futures. All right, so here's futures for the 25. It's $129. You can make back $188. Your profit target is $1,200. Daily loss is $600, and your max loss is exactly the same as your profit target. No activation fee. You can trade 2 minis or 20 micros. Need to have a 40% consistency rule. And then if you reset, it's a 20% discount, 10% discount. So the future, and that's my fault, it does not, they do give a performance reward still, 15%. So traders are eligible for a 50% performance reward from the challenge phase, provided traders meet a 10% growth targets in their funded next accounts. So if you want to learn exactly what that means, you can use that link and you can click more to find out what it is. But I like the aspect of being able to earn back your cost of the eval. That's intriguing. So check it out if you guys want. All right, so from a 30-minute perspective, no, let's go 15. From a 15-minute perspective, actually, I like 5. I would look at price, looking to rebalance these fair value gaps right here. Either just this one or both of them, and then rolling over. So I think we're going to get a slow grind into late AM session, potentially the noon macro, and hitting these levels here, and then potentially see a rollover. But based on how aggressive this was, everybody thinks we're going to get another aggressive move, and I think that's gone. I don't think we're going to get more consolidatory price action, more ranging price action, and if you're looking for the next quote unquote big move, I don't think it happens till noon or the PM session. Here's what you could get, and I've just seen this so many times. You can get flashes of big candles because you look at all of this and you're like, man, those were big candles. Look at that movement. That was amazing. So what it's going to give you is candles like this. See that big green candle right there? It was like, oh, it's about to explode. And then what does it do for the next 3 candles? Consolidates and then heads the other direction. Explodes a little bit and then it's consolidating. This is what I think that we're going to get, is moves like that. Fake moves. Yeah, so Maria, this, from what I've seen, it's the only one offering this so far. But you'll get your funded money back when you take your first payout. So you got to get a payout. Here's the thing I want everybody here to know. I think it's less than 1% of traders get a payout. I want that to be different for this stream. But less than 1% of traders, it's not just get a funded account, but get a payout from a funded account. So the odds are in their favor to offer something like this. But if you can follow your rules, if you can follow your risk management, I think it's possible. The number one reason why people don't pass, there's 7. I'm actually making a video on it. I'm making a video where the title of the video is pretty shocking. But the reason why most people don't get payouts is they're treating their funded accounts like gambling accounts. They're trying to get the big move. They're trying to get the pass in one day. They're trying to get all these things that these prop firms are offering, and they end up blowing the account because they're not treating it like a live, real account. And when they do eventually get a funded account, they've treated it completely wrong, that they don't know how to treat a live funded account, so they end up blowing that as well because there's zero consistency in any way of their trading. So that's the number one reason why, is they can't follow rules. They are treating it like a YOLO account. I mean, I've done it. I've done it, guys, and I've done it with so many accounts before this, where I would just YOLO. Oh, let's just get it at $16. Let's see if we can pass it right now. It's just the truth. So that's the number one reason why people end up not ever getting a payout. So if you don't want to be part of the statistic, you got to do something different. You got to identify what do I need to do differently so that I can not be another notch in that statistic. And that is, if they offer you trading up to 20 micros, you need to trade with 1. You need to trade with 2. I mean, you guys saw me on my funded accounts. I took 2 micros. 2. And we made decent money. It requires you to stay in a move longer, which, guess what? We need to learn to do anyway. We need to learn to not cut our winners too shortly. So we're exercising, we're strengthening different muscles by simply taking smaller size. It takes longer. Theoretically, it takes a shorter amount of time because you don't blow your accounts like you do over and over when you trade with larger size. So the whole concept that if you want to get payouts faster, you got to go slower. That's basically what you guys got to do. It's what we got to do. Take smaller size. So you're thinking, it's going to take longer. It's going to be slower. You'll get payouts faster because you won't be blowing accounts. You won't make progress and then lose that progress overnight because you YOLO'd account on an account, or you quadrupled your size because it looked good. I started that trade that we took with a single micro. And when I was convinced we were going to go in my direction, I added a micro. I added another contract. And then I sold that contract as soon as we hit the swing low and then let the other one run. So you can, with companies like Funded Next, you can get your money back. It's very attractive. You still just got to follow your rules. And if you don't have rules, you shouldn't be trading anyway. Don't trade until you got a set of rules to follow. Isn't it funny though? How many of you guys were looking at this part of the move and went, oh my gosh, I can't believe I'm missing this. I can't believe it. Oh man, how many of you were getting a little bit of FOMO by watching this just explode higher? And guess what? We were able to take it all the way the other direction. There's always going to be another move. Always. This is like a perfect example on why those feelings you're feeling are lying to you. Your feelings are a liar. They're trying to get you to be greedy and want it and try to, basically, it's reverse psychology. That's what the market's designed to do. And then you get in long, let's say here, and then it just reverses the complete other direction. Yeah. And then it gave another one. So you're saying you didn't take this one, Maria? Did you take this? The move lower? Because that's the truth. There's always going to be another move. If you miss that one, there's another one. If you miss this one, guess what? There's probably another one right here. No. Let's see if this is one right here. I would be looking at this right here. A little bit of a breaker off of the first presented fair value gap to reach up here. Yeah, it's when you have to just accept that there's going to, even if you missed both of these, there's still going to be another move. It may not be this session. There was two fantastic moves this session. Well, this one wasn't a move because there was no entry. But we had this beautiful move. Except that we may not get another one in the AM session and then come back around 1 o'clock and see if anything looks good. That's what I would do. Lulu, what's up? Where do you turn to learn? Well, you can hang out with us on the live stream. I do a lot of live teaching every day. That's number one. That's free, by the way. There's no cost for that. If you want something structured and detailed, I have an entire course where I lay out everything that I teach so you can kind of catch up when I'm talking on the live streams on what I'm talking about. Because I don't necessarily talk about every aspect of the PD arrays, but I talk about them all the time. For example, like this. This is a breaker. I don't say all the time what a breaker actually is. If people ask, I usually explain it. Or a fair value gap. Or the first presented fair value gap, right? Or the order block that's sitting right here. So if you want to learn in order all of those things, you can find down in the description, you can find a link to my the academy. It's called the Purpose Driven Trader Academy. And it's everything there. And you get access to our Discord. The Discord where I posted my trade that I took this morning. I posted in there. I talk and answer questions inside the Discord. And we're building that community. So that's growing. And you would have access to that. There's no monthly, no annual. It's just a one-time cost. And you could check that out if you want, and that information's down in the description, and the website URL is dtjacademy.com. So those are the two ways that you can do it. If you're more interested in the free ways, you can hang out with us on the live streams and ask questions. Many people do that. But if you're wanting that extra support If you're wanting to come along the journey and the mission that I believe that the Lord's asking me to do, well then you can do that with us. So, oh, you read The Purpose-Driven Life? There wasn't, and it wasn't intentional to be correlated with that, but there is a lot of correlation. I never read The Purpose-Driven Life. So watching this last 5-minute fair value gap, let's see if we, all right, we tagged it. Let's see what happens here. I mentioned if we tagged it that I thought that we could see after we hit this level here, it rolling over and move the other direction. Now, because of how fast it moved that direction, I would probably modify my expectations to be more choppy like this. And then once we hit the right time, then we could aggressively move. Yeah, so if you're wanting short, simple, take your time, all of those are, I have about 50 videos that go over all of everything that I've taught, and you can take it one video at a time. And yes, there's demonstrations, multiple demonstrations. But once you get the demonstrations, you're going to have to find your own demonstrations, because that's the only way you're really going to learn. I only can do so much. I'm going to teach you the strategy. I'm going to tell you how to identify it, how to look for it, the risks, what to stay away from, what to look for. But you're going to eventually have to be able to identify those yourself. So the goal is to teach it to you, and then you begin to do it yourself over and over and over again. The stuff that I teach, I find all the time now. I look for it all the time. I'm looking for breakers. I'm watching breakers. I'm looking for the 30-minute reversal model. We don't have any right now. This would be really interesting if we just keep moving higher. That's why I don't want to do anything right now. We're in all of this consolidation right here. See that? Why did we take the trade we took? Because what did we do? We broke out of the consolidation right here. We wicked up into this 4-hour saying, hey, I'm leaving this area, or I'm about to run aggressively the other direction. So it came up here, tagged the 4-hour fair value gap, and then aggressively moved this direction. %, Lulu. You'll get access to our Discord. It's right here. So this is the Discord, and this is the commentary. This is the trade that I took this morning. Got in for the 30-minute short with a breaker confirmation. Got in short there. Took my first TP right here. And then that was my first TP. And then I thought we were going to hit the level. So I was just posting it right before it hit that green line, but it never did. So I ended up selling the other contract right around here. But then we have a live chat that you can ask questions in here. People respond to. We have strategies that are in here, psychology. I'm currently working on a back testing on the opening sell-off and pump. I posted this here. Look at this so far. This is incredible. 75% win rate right here. And that was with 25 wins and 8 losses. I'm really excited about this one. We'll see what happens with it. I do not do any signals. I rarely do I don't do any signals. That's not what this is about. If you want to learn, let me say this. If you want to stunt the growth of your learning, rely on signals. If you want to not grow at all, look for signals. If you want a quick and easy way to lose money and not have any sustaining cash flow, look for signals. So I won't do any of that because I want to teach you to do it yourself. When I first started, I looked for signals and I lost money. And I didn't learn anything until I realized that I was never going to be able to do it on my own if I was relying on signals. So the benefit of the live stream is you're going to get a signal because I'm going to be trading. But primarily what we're talking about in the live streams is education. How did I identify the trade that I took? That's what's valuable, whether it's a win or a loss. I mean, a couple weeks ago, I had 4 days in a row of losers. I think then the week after that, I had 2 or 3 days in a row of losers. But the live stream is more than it. Now, I will tell you that I've lost people not joining the live stream because they don't want to see traders take losses. They're looking for signals. They don't need to be here. I don't care. I want people to be here that want the education and want to learn and want to be a part of a Christian-based community that wants to help other people. So that's what this is, and I'm working on building out this community as well. And every time we get more people to join that community, it becomes more robust because we have more engagement. So that's slowly growing, but you can always ask, and you'll ask as many questions as you want in there, and I will be in there answering them. Well, guys, you know what? I think I'm going to call it a day early. Not a day early. I'm going to call it early today. I think I'm going to call it early today. We'll be back. We live stream, for those here, we live stream 5 days a week, so we'll be back here tomorrow. I'll let you know if it's going to be an AM stream or if it's going to be a PM stream. Scott, just found your channel this weekend. Like the way you teach, binge watching your content. Thank you, Chris. I appreciate it. Thanks for hanging out with us this morning. But if you have any questions, you can find me on X as well. Send me a message on X if you have any more questions about the community, any of the prop firms that you're looking at or whatnot. But you can find all of that, all those links and all those discounts down in the description of this video. And with that, guys, God bless. Stay safe. And we will see you all tomorrow. Take care. Bye-bye.